And we have a rally. What a difference a couple of weeks makes. We went from a tentative and weak-looking stock market a few weeks ago to a vibrant and healthy-looking stock market this last week. Let's talk about it. Everything is moving higher, but most importantly, riskier assets are outpacing safer assets. They're moving up first, and they're moving up faster. This is what you want to see at the beginning of a rally because it demonstrates a healthy appetite for risk assets. You can see that here if we look over the past week. The best performer was Ark Invest. These are the riskiest assets, followed by small cap, also very risky assets, followed by the NASDAQ 100, risky assets, followed by the S&P 500, safer, followed by the Dow Jones Industrial Average, safest. This is exactly what you want to see. And if we look back over the past month, you can see that since the bottom here, ARK has just blown by just about everything except small caps, and small caps are leading the way up here. So this is really looking good, and you can see the NASDAQ is on a steeper slope here, even though it hasn't surpassed these others yet. It will if this continues. What about the current market dynamics in our bottom analysis? Well, it looked like we were going to get a bottom confirmation here. The bottom confidence indicator, this blue line, was at 100%, but the confidence level wasn't quite there. But I do like the fact that the confidence level is tilting slightly higher, and the bottom confirmation indicator is pointing higher. We could get a confirmation next week. This isn't necessary at this point to determine that we're in a good market. It's a nice to have. And if we look back over the past year, you can see how this has played out. We had a bottom forming indicator here. We had a bottom confirmation here, and the market went higher, and then it failed. And then we had two bottom forming indicators here, a bottom confirmation here, and you can see the market went higher, and then it started to fall back. And now we have potentially another bottom confirmation here, but we're not quite there yet. Like I said, though, this is nice to have, not necessary. And this is really telling. If we look at equity versus safety, you can see back on December 23rd, we had an unhealthy stock market, stocks down here, and an unhealthy treasury market, long-term treasuries down at the bottom of this list. You can see that by December 30th, we still had an unhealthy stock market, still had an unhealthy treasury market. Gold, cash, and T-bills, short-term treasuries, ranked 1, 2, and 3. Then on January 6th, things started to look like they were moving. So you can see small caps up here. You can see TLT here, longer-term treasuries moving up, and equities kind of moving up, except that NASDAQ 100 was still at the bottom. Now let's fast forward to this past Friday, where we now have small caps in number 1, NASDAQ 100 number 3, SPY number 5, and Dow number 6. This is the order I want to see these in, and you can see that longer-term treasuries, EDV and TLT, are moving up as well. So now we're starting to see a healthy equity market and a healthy stock market. What about buying and selling pressure? This is another way to look at things. Well, this really tells an interesting story. So let's take a look. So for the Dow, you can see that recently the buying pressure, this gray solid line, moved above the selling pressure, the solid orange line. And you can see the 1-month trend is increasing here, this small dashed line. And the price has been moving up very nicely. What about SPY? A little bit more risky. Now keep remembering where this level is here. So now SPY is a little more risky, and you can see that the buying pressure is above the buying pressure for the Dow. This is a good indication. Let's take a look at the NASDAQ 100. The buying pressure is well above that of the Dow and SPY, and the price is moving up very nicely here. What about the Russell 2000? The buying pressure is even higher here than it was for the other two, and the price is shooting up very nicely. And what about Ark Innovation? Again, the buying pressure is above all of the others, and the price is starting to run up very nicely. This is a healthy rally. I think it's really helpful to look at the rankings from last week versus this week because they tell a really important story. So you can see here, last week cash was ranked here, aerospace first, gold second, energy third, industrials, and so on. The Dow was the best ranked index, broad index here, with cash here, consumer staples here. Let's move up to this week and do a comparison. So if we look at this week, you can see the cash has fallen way down here. Now, I would like to see it fall off of this first table. That means that things are moving up nicely relative to cash and that we're leaving risk behind, basically. So, but you can see that gold is still up here. Energy's moved back to number 1. Aerospace defense is now number 3. And then we've got the broad index Dow still here. But what I also like is consumer staples has moved down the tree here. If you look at the last one, consumer staples was here, 1, 2, 3, 4, 5, 6. So it was ranked 6, and now consumer staples is way down here, closer to the bottom of this chart. This is all looking really good for the current health of the stock market. And what if we look at the worst ranked sectors from last week? So you can see that technology, stocks, semiconductors was ranked here. Now semiconductors are ranked up here. This is a huge jump in a risk asset. You can see that SPY was here. Emerging companies, QQQJ, were here, and so on. And Bitcoin, clean energy, and innovation were down here. The Qs were down here, 5th off the bottom. What about this week? Well, not much has changed down here at the bottom, but you can see that treasuries have now moved more into this bucket, which is fine. I don't mind treasuries being in the worst ranked sectors, but near the top of it. That's kind of a healthy place for them to be. And speaking of treasuries, let's take a look at how they performed this past week. You can see a very nice rally here in the longer-term treasuries, EDV and TLT. So this is saying that people are putting their money back into treasuries, but they're putting their money back into longer-term treasuries, which are more risky. So there's more of a risk appetite, even on the fixed income side of things. This is really good. And let's see if we see that show up here in the buying and selling pressure. Well, you can see here for 3 to 7 year intermediate treasuries, the selling pressure has started moving up here and the buying pressure has started moving down. In fact, they crossed recently. Let's see how that compares to some slightly longer term treasuries. So if we look at 7 to 10 year, I call these intermediate to long treasuries, you can see that the buying pressure is well above the selling pressure. Now it is aiming down, but the longer term trend over the last month has been increasing buying pressure. This says there's a tilt toward longer term treasuries, at least for right now. Let's look even longer. Let's look at 20-year treasuries. Again, the buying pressure above the selling pressure, nice run up in price here. This looks very, very good. And what about gold, my favorite asset? Not really, but you can see here that the buying pressure has just really been spiking up here, and gold has had a very, very nice run up. Now, gold typically there is no typical for gold, but when gold goes up, it could be because the dollar's falling, and if the dollar's falling, which it is, that could be because the markets sense that the Fed is close to being done raising rates. That's all good news for the equity markets and for the treasury markets. And finally, what about Bitcoin, the riskiest asset in all of these? And you can see here, the buying pressure is off the charts. It's very, very high, at least on par with, I believe, ARK. And you can see the price is starting to hockey stick. Hopefully this continues. This looks really good. While no one has a crystal ball, what we can do is take the pulse and the vital signs of the current market conditions. Right now, the doctor says we'll live another year, but come back next week for another checkup. I'm Calvin Rose, and thank you for watching Invest Smarter this week. That's all for now.